Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, the 16th day of July 2014, and this is the daily report for gold and silver. Nice showing to the upside, moderate to small in terms of price change, but it has ended the decline that we've seen recently across the board in the precious metals markets. We do have gold up almost 0.5% on the day, or $6 higher, just below 1,300 per ounce, 1299.40, low 94.30, and the high 1304.50. Silver also trading higher, although nominally higher, up about 8 cents on the day, the low 20.50, the high 20.95, current print roughly 20.74. More on silver towards the end of the show. So traders, I want to start today's show by looking at a daily chart, spot market of gold, standard candlestick format. When we take a look at the recent activity, a couple of things really stand out. First of all, our dramatic rally, which gave us about $100 gain. We saw the market move from roughly 1240 to 1340, and we have seen a retracement at this point of pretty much 50%, 1293. I believe that was the low today, but also the low was just below that yesterday. You can see this small tail right in here. So when we consider that the market is gone up $100 roughly, come down $50 roughly at this 50%, this is actually a good point to look for a potential bottom in the market. Now, whether the bottom in the market really puts itself in terms of some sort of a retracement, in other words, an A, we get a B here, and then a final C, whether the C culminates as a flat or as a zigzag, which would take us to 61%, is yet to be discovered, or unfolded, I should say. However, one day doesn't make the change, and that's why I haven't really issued any kind of buy trigger yet. I want to see confirmation on this current candlestick pattern that we're looking at. And the candlestick pattern that we're really looking at, as this market comes down, we're getting what's called a piercing line. A piercing line is simply where you've had the market in a downtrend. You get, on a cash market, you get an open that's equal to the close of the prior day. That's always going to happen on a 24-hour market. But it trades higher and it closes at or above the midpoint of the prior candle. And I can say that we've met this definition. Now, to get a confirming candle, we would want one more candle to come in, or we would know this tomorrow. And the way we would know this tomorrow is we would get a confirming candle. And a confirming candle for this type of pattern is simply going to be a green candle, meaning a day with a higher close compared to the open, higher high and higher low, gives you really the parameters that you want. You can get variations off that. But in essence, this is what we would be looking for, meaning it would trade and pop back above 1,300. We would see 1,300 become support, and then from support, we could, in fact, then see this market genuinely begin to trade higher. Now, let's assume that we do see that, and let's further assume in terms of our current model that what we're going to look at is for this market to move anywhere between 50 and 75% of this recent decline. Where would that put that? Let's go ahead and plot that out now. So traders, you can see I've added another fib retracement. The only other thing that I've done to this chart is just moved the prices on our former fib retracement to the left so we can pay attention to what's going on the right. Here's what we're looking at if this is the kind of model that we would see. In other words, if we're going to get some sort of an ABC, in other words, we got a 1, 2, 3, 4, 5 moving up. This represents wave 1, then wave 2 coming down. Wave 2 could be comprised of an ABC. So let's assume that this is our A. Our B would take us anywhere between 1318 and 1333 before stalling out, this up at around 41, and then we would get one kind of final press down if that's how this unfolds. Now, it makes sense that we would see this market on a technical basis move back up. It also makes sense if it moved back up that we would have real resistance at some point in this area, whether it's around 33. We know we had that one top at 33 and this at 40, Or if you look at these bottoms right in here where the bodies fall in, they fall in roughly at 1321. That was a number of ours. 1305, I think 1300 is more important, and then this is that 1320. It kind of matches here. So we do get a harmonics of sort. Really, what the difference being about $2 on there. So in terms of a basic model in the market, this is what I believe we could see play out. Now, when we look at this same market move through a short-term chart, this being a 360 Japanese average format, what we're looking for is to see if we've gotten any kind of real dramatic change in candle color and what size bodies we're getting. Have to blow it up for that. You can see here's that dramatic fall. We do get our pivotal doji candle right in here. We then go to green, but green we've got very, very small body size. We also have upper and lower wicks, which tells you it traded above the, below the midpoint of the prior candle, because we look at these lower wicks. That's what's really important on the Japanese average to define an uptrend. So if the market is bottoming out, it's bottoming out without any real pressure to the upside. Could simply be short covering, and that's why waiting for that confirming candle is, as far as I'm concerned, is critically important before we actually trigger or issue a buy recommendation. Now, when we look at our silver chart, we don't get a true piercing line. We almost get what's called an on-neck pattern. It's nowhere near as bullish because the whole idea is that we need to see the market trade within the mid-range and above of the prior candle. This, again, a daily chart spot market of silver. So I'm not as optimistic on the bull side in terms of silver right now. As I said, we haven't really touched upon, we didn't get the kind of retracement that we saw, whereas in gold it retraced 50%. Here we retraced what, roughly maybe 34, 35. This is our 38% retracement, did go through 23. So in terms of a technical basis, we're really in between these two fib points. And more importantly than that, when we look at this chart historically, what we find is that we don't have any kind of technical precedence of where this particular price point fits into the price, except for the fact that you had a little bit of a price area right in here in which you did find a bottom just prior to it slipping and falling. So I don't know that I would really hone this in that much, but if anything, that's about the only place that I can fix this on a technical basis. I'm not convinced that I would issue a buy signal in silver unless we saw a dramatic move and we had gold triggering the buy at the same time. As I said, we'll have to see how this develops over the day today as well as tomorrow. But I believe that if we see higher pricing coming in as it trades overseas tonight and shows some sort of positive move, we'll probably issue some sort of a buy trigger tomorrow morning. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.